If you're looking for advanced applications of median line analytics, let me show you how I apply them to the Elliott wave principle. Before I show you some charts, let me set the scene a little bit. The Elliott wave principle is a detailed description of how markets behave, and it provides a market context as well as a forecasting tool. But learning to apply it in real time can be a huge challenge, really, and many traders write it off as a result of that. Yet, once mastered, it can be a very powerful methodology. Now, median line analytics had its origins in the early 1900s. I want to start by showing you an example of the Dow Jones back in the 1930s. And here's the Elliott wave count. We've got an extended wave 5, which is not necessarily that common. But by applying the channeling technique, you can see that it didn't actually help very well to find the termination of wave 4. But if we apply it to find the termination of wave 5, it did actually work very well. Let's try applying median lines to these pivots. So this blue median line applied from the origin using pivots 1 and 2 was used to help find pivot 3, and you can see that there's a change of behavior here, that price broke through the median line and then there was a strong zoom down through it, and then a failure to reach the median line, and then price went sideways. That also coincided with a Fibonacci extension of 1.382. So the change in behavior is really what alerts us to the fact that wave 4 was underway or unfolding. Here we've applied a median line in the form of a shift to waves 1 and 2 to help find wave 4, and it worked very well in this case. This is not uncommon, and quite often wave 4 will either terminate on the median line or on sliding parallels relevant to that median line. And we've also checked the guidelines for the Elliott wave principle relating to wave 4, and you can see that that's complied very well here. So with the median line now drawn on pivots 3 and 4, or waves 3 and 4, we can now use it combined with sliding parallels to help look for areas of support and resistance. Note the false break here. That's quite bullish in this uptrend, and price has regained the lower median line parallel and then moved up. There's also been a very distinct change of behavior here, which has alerted us to the end of wave 5. Notice the break of the sliding parallel and then the lower parallel here. Now, if we go back to that original modified shift drawn on the first two pivots that I showed you before, you can also use that to monitor support and resistance levels and how they behave as price unfolds. And you can see that support builds, but when support starts becoming resistance, a change in behavior occurs, and that really signals often the end of significant swings. You can also see how the median lines can be applied to logarithmic scale. And here, the validation has been extremely strong: support, resistance, and the failure that's occurred here, price failing to reach the median line, has become much more obvious. The price failure to reach this median line is one of the first signs of change in behavior, and the second sign is this action and reaction to the sliding parallel. Dr. Andrews prescribed that you should really try and look for what price is not doing, and here it was very clear that price did not reach that median line. Now, in addition to applying median lines to monitor price behavior, I also apply median lines to monitor momentum behavior, and that's quite unusual. You don't see much of this in the market, but it's incredibly important when you learn to read the signals. So by now I'm sure you can see that median line analytics yields much more information than Elliott's channeling guidelines, and I'm not criticizing those channeling guidelines. They serve a very good purpose, but median line analytics can be applied to all types of motive waves and all corrective waves, whereas Elliott's channeling guideline can only be applied to impulse waves and to zigzags. Now, just before I move on to some more charts, there's a key point that I really want to stress. The Elliott wave principle is a detailed description of how markets behave. Median line analytics, on the other hand, detects changes in price behavior. So you can see the important connection between the two. The examples I showed you before on the charts were from the 1930s. Let's shift forward 87 years and apply the methods to current charts. Here's a chart of the S&P 500, weekly basis. Here are the significant pivots that you can see. Here's the use of Elliott's channeling guideline used on P1, P3 and P2 to help find P4, and in this case it worked pretty well. Now let's apply a median line to those pivots. Are you starting to see something familiar? I hope so. See how price tracked up between the median line and the lower parallel, and only breached it twice but didn't close below that lower parallel. Now, if we apply sliding parallels, and I've denoted them SH here, here's a typical one, it's taken off this internal pivot here, you can see how that acted as resistance on numerous occasions, and that helped to build validation not just for the median line, but for that particular sliding parallel. So you can see the significance of that sliding parallel. I've shown it in pink here so that it stands out. It defined resistance numerous times. Now, let's look for support. See this false break? Does that look familiar? Sliding parallel on that, so that when that's breached, that is a clear change in behavior on this time frame. There's also a sliding parallel just above that, which is also giving pretty useful information, and I've shown that in green here. If we zoom in on that, you can see a clear rollover towards the top. So price failed to reach that blue sliding parallel and then fell away and broke through support, and that support then became resistance. Now, just to finish off, let's look at how we apply a median line to a corrective structure. Here I'm using the Russell 2000, and from the June high, a correction unfolded in the form of a zigzag in this case, and we're able to apply a red median line to the significant pivots. You can see how well this worked if we look at the daily chart. And what we're looking for with the median line analytics is changes in behavior that could lead to either a trend reversal or a more complex correction. Now in this case, what happened is price made a lower low here, but it failed to reach this sliding parallel. Then it started building support on what was previously resistance, and price moved up. And when it hit the median line, you can see resistance here turned into support, and price moved out of that median line and started a new uptrend. Now the power of median line analytics becomes extremely clear when you can see how one median line since 1984 has defined resistance in the 30-year Treasury yields. And for a change of behaviour to occur, we'd need to see a breach up through this green zone here, with yields probably exceeding around about 3.5. It's often impractical to show detailed Elliott wave counts on top of median line analytics because the charts just get way too cluttered, but we do show the significant pivots here, and you can relate those back to wave counts while the active median line is in play. By now I'm sure you can see some of the key reasons why we're hooked on this method for trading. Median line analytics defines trend, strength of trend, support and resistance levels, which is incredibly important for evaluating risk. Trading is all about managing your risk. The method also helps to define changes in price behavior, and this is very valuable for determining when trends might end or when trends might start. Now those methods were applied retrospectively, and there's really no substitute for being able to see the methods applied in real time. So to help with that, we've actually offered a discounted trial. All you need to do is to select your group or groups of interest, sign up, and follow the reports. Please take a look at the website. There's educational material there as well as reports that we publish. And if you have any questions, please don't hesitate to email us at support@tradingmotives.com.